Welcome to TradeTheMBI.com. This is John. This report is for the 1st of March. Well, it was a nice way to end it. Things started off pretty decent and faded pretty quick as we retraced, just getting caught right back down here towards the ABM. We had seen that we got a little overbought from back before on this little breakout, and all we've done, and this is what we talked about, that we would have a consolidation, and I said at the beginning of this that it was too early for a breakout given the time of the month, so it was an unusual move. It was significant, and it just fully retraced it, so it's a wild activity, and there was no impetus for it because the reality was we kept seeing midterm buyers weakening. The only thing that was elevating it was this little short-term buyer boost. That started to fade back as soon as we had this, engulfing candle, they would refer to that as, but the steel. Short-term buyers faded below the shorts right there. That usually creates a little bit more weakness, and that's kind of what we're seeing. Is the sky falling in that? Not particularly yet, though we're seeing the start of the day with a shakeout below the yellow line for the first time in a while, and we haven't seen a turnaround yet in midterm buyers, and it's too early. We would expect next week, beginning of next week, new fund flows will start, and that would be the beginning of it. And this is what I was saying back over here, right as this was taking place. So that would be more in line with an expectation. NASDAQ, we can see, is actually performing a bit better. So it performed better on the breakout part, and it's actually held up better on the minor decline. So there's a little bit of a disparity between the indices at this particular point, which means tech is just outriding things a little better. You can see the shakeout nearing that positive level at the -1 right now. I believe we were positive before. Yeah, we were plus 0.5 leading into this reset right back here to the ABM. And, those are the little anomalies, sort of like the anomaly here in Florence, Italy, the first snow in like 20 years, where it's actually like real snow. The euro, right at the bottom of the channel, still way higher than it should be, but a continued fade on that is certainly going to put more pressure on the market. So that's something to watch out for, I think, because the inflated euro certainly was boosting S&P, and the fact that it's returning back, well, it's still outside the range, but the closer it gets towards that 120, the worse I think you can expect the performance of the S&P, because it is going to weigh on earnings. And, of course, people flight to safety. Not a surprise, despite the yield discrepancies. Of course, there's still an argument that some people are making that even though you've got growth, it's not, and it's funny because I just read the article. I should have posted it on the Skype chat for us because it was discussing something I've been talking about for years, that they finally recognized that the Fed, no growth policies before, don't necessarily guarantee that we're going to have inflation, since, improvements in the labor participation could soften the need for rising wages. Well, geez, isn't that a broken record that I've been saying for years? So, anyway, it doesn't really matter at this particular point because it hasn't materialized yet. And a little fade back of oil because any cut in potential growth is certainly going to impact oil the strongest. And I think if we see a breakdown, particularly below these lows, that would indicate potential softness global economy-wise. And that's definitely, at this point in the business cycle, something that's going to be looked at. Of course, we have the tax cuts, and we got the exuberance that's, taken off from there, but that's got to return itself in actual growth, which we are seeing. So, it's just no canary in the coal mine yet. It was interesting, too. I did see another article that was actually talking about, and it was talking about the potential of the rate hikes that the Fed is planning and how disruptive that could be. I still am of the belief that they're going to slow go that, and that will help, because I think that they're seeing underlying issues that even a small impact of the mortgage rates rising has already seen a significant decline in home purchases. And so it's those kind of things that weigh on like gold here, where, okay, you're not necessarily guaranteed that, once things get going, unless you get a momentum to the economy that is chugging along multiple quarters of high growth, it can be displaced very quickly, particularly in today's environment. Let me shrink this 5K here. This is a quite active day. But that tends to be the case in the end of month because you get a lot of this rotation. We got contract expiry coming up. So we had a steady decline that had been taking place from there, but we got a bunch of buy signals all early in the day right here. And it just was an accumulation. You kept seeing a rise, but then it sort of peaked out pretty quick. And we developed this big DOC spread. It's like everyone just ran for the exit all at once after this accumulation. We had positive extremes from here, but they had all been filled. The only thing close to it was right about this level. And that was all the way up here. And that pretty much retraced itself in just minutes from there. We came across with some decent setups. The only problem with buy at this particular level is the shakeout being so deep. And then we finally produced the exact same thing, pretty much right same spot. So you would have just taken some heat if you had decided to get into the earlier one, though it did come close to getting to its 50% early rebound target. You expect a little bit less out of that when you have such a deep shakeout move. It takes a little bit more for it to get going, and then you get that secondary rising DOC red where you're closer to that 13.5 zone, and it breaks out, gives a little bit more power. And even this one though stagnated for quite a while. I was like, is this thing ever going to move? I mean, obviously when getting into this particular spot right at the 23 with the 0 point as a stop, nothing really happens, but you're still looking for your 50% move, and it hit that beautifully. Stayed fairly decent on it because you had the rising brown, everything was just kind of fine flat, and then you ended up with another version of your DOC spread there with the cyan breaking down below the steel. Even still, you had to wait for a shakeout to confirm before you'd be able to do it, so that's when it finally broke down below the ABM yellow here. And I mean, you're only expecting a move at least to the 50% at that particular point, but when you saw this cascade, it just was wide open. I was expecting the 0 at that point, and then it was just a matter of trailing it. And then I started just to use the 38% trail, which mimics here the short algo if you kind of follow it. There's the short algo, it's just a slight variation from it, which is something I've been working with on the long short algo test as an effective way to really trail price significantly lower without getting caught in the little buybacks that you'll tend to get, like right here, that will come to the 23%. And particularly when there's no reset of the steel. If you get a reset of the steel, the possibility for those to really take off is real. But without a reset of the steel, you really have to keep your bias more towards the idea that you're really, if you get past the 23, you're going to be lucky to get to a 50%. In this particular case, we can see we've had these deep oversold coming in through here. The shakeout finally improved, and then you get your next dip, and that's what's actually led to this move, which actually has just taken us to the 50% mark because we've had that decent reset and the improvement in the shakeout. And you see that lovely little line right there. It's not until the shakeout gets above there do you ever really see any significant boost from those runs, because they usually flatten out until you get that improved shakeout, and that's exactly why that line is there. It just gives you a reference point. So all in all, that was pretty good. I think Bitcoin, it changes. Sometimes it's been having some weird data feed on the Bitcoin one, but in general, I think that the market is still going to be soft right until we get towards, well, now that we've started the month, we still got a day or two to go, and with today being Thursday, you only have Friday, so you may see some pre-movement now that the new month has started, and that will give us a better indication. But at this particular point, it's still weak, and you don't have a daily reset of steel either. So there's no real oversold or anything like that that's going to give you the impetus. The fact that you just have new flows means that you have a more likely move slightly to the upside. But this was a significant dip down that I think has been healthy. I mean, these are the ranges, the volatility increase that I told you to expect. And boy, if it hasn't played out beautifully. So all excited for that and ready for a new month. So this is good stuff. As always, though, look for me in the Skype chat and trade well.